recording button. Hello everyone. Those who don't know me, my name is Katerina, and here is also Matt, my colleague, and we are here to cover the U.S. Inflation, the CPI, for you. So, as you can see on my screen, at the current moment, the forecast stands at minus 0.1%, while the prior figure for this indicator stood at minus 0.1% as well. Let's take a look at the history of the indicator and also talk a little bit about the projections. So here I would like to remind you that the U.S. consumer prices fell unexpectedly in December by 0.1% following a flat reading in November. Energy prices continued to decline while services rose quite moderately. Despite this fall, the CPI, just a second. Sorry, just some background noises. Where was I? Yeah, despite the fall, the CPI increased 0.7% in the 12 months through December, the biggest increase in a year. Meanwhile, core CPI, excluding food and energy costs, edged up 0.1% after rising 0.2% for 3 straight months. On a yearly basis, the core CPI rose 2.1%, the largest gain since July 2012, after climbing 2% in the previous month, in November, I mean. The latest reading on the inflation is expected to show consumer prices fell 0.1% in January, while prices increased 0.2% when excluding the more volatile costs of food and gas. Compared to the prior year, core inflation, which is ex gas and food, is expected to rise 2.1%. And while this is not the Federal Reserve preferred measure of inflation, well, that honor, of course, belongs to the personal consumption expenditures, a 2.1% year-on-year reading would be slightly above the Fed's 2% inflation target level. Let's move on. Let me also drag my camera with me. So different experts from different banks and the financial institutions, they share their opinion on the matter, and as you can see here, their estimates. And according to their views, we have the Bloomberg survey summary, where the median estimate stands exactly at the same number as an official forecast of minus 0.1%. Average estimate is minus 0.11, high estimate is 0.1%, and the lowest estimate is minus 0.2%, and the total number of estimate, as you can see here, has reached 82 this time. And of course, as always, I have a couple of comments. Hi, guest 143. Yes, so the first quote goes as follows. The outlook for inflation remains quite weak as the deflationary process continued to make their way through the price channel, say the economists at TD Securities. This was the quote taken from their notes, which is already published today. They go as far as predicting the core inflation rate will ease to 1.7% by the end of the year. And one more quote is the one by the die-hard hawk of the Fed, James Bullard. He said that I suggested during 2015 that inflation expectations would return to previous levels once oil prices stabilized, and then he also added that since then inflation expectations have declined too far for comfort, the oil price correlation notwithstanding. Basically, today we are not having the Dukascopy community member sentiment because we have not created the poll for this particular data release. Anyway, I don't have any time left, so I will pass the floor to Max to cover the technicals for you guys.
Thank you very much, Kate. Hello, everybody, one more time. So, speaking about the technical part for this particular data release on the US inflation, we have the positive surprise trading strategy because without looking at the monthly numbers of inflation, which are quite volatile and are falling or increasing from month to month, we see that the forecast for the annual inflation is very positive today because the inflation on the annual basis, the headline one, is estimated to pick up from 0.7% to 1.3% in January. And some financial institutions, even such as JP Morgan Asset Management and Jefferies, they expect inflation to pick up even up to 1.5% for the first month of 2016. Therefore, in case we have the positive data indeed, we of course can observe some positive reaction from the back. And today we have the euro-dollar currency pair for discussion, of course, the sell market for this particular strategy. Also, speaking about the market sentiment, we see that it is slightly bearish right now, from some side supporting our overall sentiment, but it's not quite enough to claim that it is very strongly bearish at the moment. At the same time, the US dollar is being bought in more percentage of all the cases, in 55% right now, while pending orders in 50 and 100 pip ranges from the current market price are actually quite divided on the matter, so they are broadly neutral. And the market sentiment, of course, provided by other market participants, seems to be supporting our market, so they are also going short on the euro and long on the US currency. Speaking about the current market situation, as you can see, the pair has just consolidated below the 1.11 level, quite a major one for today. And of course, as usually, to project the possible market reactions after the data is published in 2 minutes from the current moment, let's have a look at the previous reactions for the euro-dollar currency pair. And in the last 5 months from now, so from September until January, the average reaction for the most traded currency pair was 20 pips. So quite a medium reaction actually for important data releases. And of course, in case we have a positive surprise indeed from inflation data, which would be very good for the Federal Reserve, of course, to set its interest rates, we can see the euro declining below 1.1090, which is the first support for the current trade, which is also the weekly S1 support this time and for our pivot point. And in case we have stronger than expected numbers, we also may observe the dollar appreciating even more up to 1.1080 against the common European currency. Of course, we cannot rule out the possibility of negative data, especially in the wake of the recent decline in oil prices. And in case it happens, then we can see also the euro climbing in value back above the 1.11 mark and above. So, since I have just 25 seconds to go, let me mention the technical indicators which are supporting actually the bearish case for the pair on the 30-minute time frame, the time frame which coincides with the current data release. Okay, we have just a couple of seconds to go when we are going to see the numbers in the chat section and hopefully the first initial market reaction from the US dollar, from the euro US dollar currency pair. And as you can see, there is a downward reaction, initial one, so the first seconds of the new minute. We are still waiting for the numbers to come in. but actually reaction is positive on the dollar. Possibly we have some positive numbers from the US. On the monthly basis, the actual numbers are in line with expectations, and on the core basis as well, on the monthly one, actually all the numbers are pretty much in line with expectations. So the inflation rose to 1.3% in January and remained unchanged at 2.1% on the core basis on the annual reading, which is actually a very positive surprise for the US because inflation picking up just in 1 month from 0.7% up to 1.3%. It's a very bullish signal for the Federal Reserve, which is going to consider whether to continue increasing interest rates in March or not. Speaking about the first market reaction from the euro dollar, the overall downward change was some 18 pips to the downside, which is pretty much in line with the average readings for the last 5 months. But since then, of course, the pair has already bounced back slightly. I guess that will be all from my side for today, and actually for this and the next week as well, because since I am off next week, we will see each other in the beginning of March. Okay, thank you very much. I wish you all a great weekend ahead, and back to you, Kate.
Thank you very much, Max, and thanks everybody for the participation. You can still see the reaction and, of course, the numbers in the chat section. Thanks for staying with us. Right now, we are saying bye to you. Have a wonderful weekend. And as I am not off the next week, we will see each other on Monday with a new webinar, with another data release, and with everything else. Thank you very much. Stay tuned. But for now, bye. And we are also welcome Doc to proceed with his webinar.
Oh, thank you. Thank you, Max. Thank you, Katerina. Not bad. All right. And the numbers, I heard largest gain in I guess in almost a year and a quarter, something like that, or 4.5 years, something like that. It was a big number. I heard something this morning that they had one of the British statistics was the largest or the biggest number change since 1930. Can you imagine that? It was over 85 years ago, 86 years ago. And that seems to be the way things are going. Things are definitely weird. And it was up 0.3. Largest gain in 4.5 years. So, I guess, oil, and I guess X food and energies. I haven't taken it apart yet. We'll see if it could be literally the cost of labor. Anything's possible at this point in time. But the January CPI was unchanged. So we'll have to see how it all plays out in the end result. Anyway, where are we at? Oh, yeah, so I was rambling along about the euro. You can see it here now. Again, money is trying to sell itself down again. And I would assume that whatever activity, you can see this, this is in a 10-minute chart. Whatever activity is going on here, they haven't resolved it. Obviously, the British, or they call it Brexit. The Brexit is what really has this market tied down at the moment. So you can see that the numbers are trying to have an effect, but until I guess